Good morning, everybody. It's Wednesday, July 10th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here, December corn down 1.5 at 407. November soybeans were up 1 3/4 at 1081 3/4, and December Chicago wheat was down 5 at 590.5. This morning, we had an export sales announcement of 132,000 metric tons of soybeans to China for 24. Good morning, guys. Hope everybody's doing well. Nice to see a new crop soybean announcement. I know that the trade has been patiently waiting as they've got nothing on the books, but they kick it off 132,000. We had obviously the remnants of the hurricane move through the upper Midwest here yesterday and into early this morning. I know it's kind of moving into the eastern Ohio Valley here this morning as well. So Ben's probably getting a little water over his way, but Dustin, maybe a couple things to kick us off. I will note that we did see a jump in open interest again yesterday. Corn up 12,744. Soybean open interest was up about 6,400. So the continuing build of open interest there in corn and beans. But anyway, just maybe a few thoughts. We'll kick it around the room here as we go this morning.
Yeah, thanks, Dan. Yeah, that hurricane was perfect rain, really, for Illinois. I think a lot of guys are feeling pretty good coming out of that. Talked to a few customers this morning. 5 inches of rain in central Illinois, exactly what you'd want to see. And, but we do have some other news, like the Brazilian real was up pretty good here overnight again, and it's well off of its lows here from last week. So that's one thing to consider. And then I don't think it's that surprising. We had a massive break to new contract lows in beans yesterday, followed by a Brazilian real rebound. And then we're seeing the first new crop Chinese purchase that we've seen so far in the books, for 24, 25. So I don't think there's coincidence there. The currency's kind of moving in our favor to see that. And first one, I mean, there's a long way to go. Obviously, 132,000 metric tons for new crop. They've got a lot to purchase still. I would also kind of caution that forward sales is definitely indicative of their demand, but it's not the final say in it. As we get closer is where it matters more. We start seeing a lot more of those deliveries. The sale obviously has to come first, but the first deliveries don't start until new crop comes. So
shipments, right?
They can purchase along the way.
Yeah, so keep an eye on shipments. Obviously, that's the key. And
yeah, I mean the shipments. Yeah, we've gone both ways. Like you think sales are a forward guidance, and they certainly are, like by all means, but they can catch up quickly when they need to. So just keep that in mind.
Very good. Ben, thoughts from the Eastern Belt here this morning?
Yeah, the rains here certainly performed. I'm just going to go back and reiterate what I said yesterday, that do some contingency planning, talk to your advisor. Short covering rallies this time of the year typically don't have a long shelf life. If we get one, it's not likely to last real long without a material change in the inputs that we have today. And on the same token, should we take a deeper dive and get into crop insurance type of payments a little deeper into the RP policies, that's not likely to last long for either. So I think having a plan and making sure that you understand a way to approach that is critical, because we're kind of here. We had this big break. We factored in a tremendous amount of negative information in the corn market going back 3 weeks ago when weather models flipped to a pretty negative report. And then having Hurricane Beryl literally drawing up a rain as perfectly as you could for the dry areas in the country. So a lot of that's behind us now. Doesn't mean that we don't go lower. Doesn't mean we don't have a short covering rally of some sort. But I think it's imperative that you think through what would you do at, whatever that number is, 20 higher, 25 higher, and what would you do if we go 40 or 50 lower? Still we have this cloud of the grower holding a lot of bushels on farm, and at the same time we watch spreads tighten down here. So when you're looking at July D, Sep Ds, they've all contracted. So, meeting short-term domestic demand until we get to that, to the next first notice day, could provide a little bit of, a little bit of fireworks from time to time, but it's not likely to last without a material change in the weather.
And Dustin, I thought it was interesting. You kind of made a brief mention on yields projections and things like that, just what the trade is looking at. I thought it was interesting. FarmDoc released yesterday their ranges, and they've got a statistical method of looking at crop conditions and things of that nature. But their upper end yield estimate was 185. Their estimated yield is at 180, and their low end is at 177. So interesting after these recent rains through the really heart of the belt, where you're probably tightening that range a little bit, from where your high end to your low end kind of looks like.
Yeah, that's the thing. We keep, we are kind of joking. We could be convinced of 177 to 184. Just because when you have, the question of, who's investing in fungicide application this year, and, what are the holes in that Northwest Iowa corner looking like for, bringing down national yield. There's a lot of production up there that it's going to be zeroed out from just drowned out acres. So that I think we calculated that could easily be 2 to 3 bushels off the national average if it's that bad, just with how wide of an area that was. The hail event in Nebraska, 400,000 acres of good producing ground, that was impacted, is the estimated number. So there's a lot of holes that could bring down the national average, along with maybe some divestment, and what we'd have when prices are a little bit higher. 177, I would probably be more in line with trend right now, just because of this rain. It's been really good. I'd be more along like 181, just my personal opinion. But 177 still is basically a record yield, and there's a much different price outcome, in my opinion, at 177 versus a 184, 185. So market's still kind of got to decide that. I mean, market's, I think, priced in a pretty high number right now. I think they're trading above trend.
Jace, Jace was shaking his head there when you made that comment. Thoughts there, Jace?
Yeah, no, you can't argue with that, right? There's a big difference between 177 yield and 184. I agree with that. The weather's been about perfect. It's hard to argue against that. Since the crop's gotten in the ground, you couldn't ask for better weather if you want to have a record kind of corn yield. It is July, right? So it's great to this point. You still got to finish the crop. I mean, to get a perfect crop or to get a record yield that we haven't seen in a number of years, you really got to have perfect weather all the way through September. Can't have too much heat. You got to be getting good rain, not too much rain here and there. I mean, there are obviously some spots that got too much rain. That's going to hurt national yield, but it looks like that area is going to kind of dry out. Some of the dry areas got the rain. It's been a flip flop of almost. Perfection's not the right word, but like I said, about as good as you can ask for.
Ideal
up to this point, to get really good yield. So we haven't seen higher than 177.5. For we haven't gotten to trend in a long time, and so to get that or get above it, obviously it's going to be debated. It's been debated every year. The setup right now, it'd be hard to argue against. This would be a shot at it if we finish off the year over the next couple months. So I did want to add one thing. Ben was kind of talking about getting your plan together, getting some kind of targets. I would think if to Dustin's point, the Brazilian real has turned around over the last few days. We're doing some bean sales. Maybe we can get a little short covering bounce or something like that. I would think technically, if you look at a corn chart, the kind of the highs that when we tried to bounce back after that acres report, I think we got up to like 426 a couple of days after the report, and then kind of failed. And obviously we're around like 407 D's corn right now. But I would think if we start to test that area again call it 425 to 430 area, that'd probably be a good spot to look at doing something. Especially if you've gotten that perfect weather and you're looking at, you're starting to pencil in, close to a record yield on a technical level. I think that's something to just keep an eye on.
And it's important too. We got the USDA report on Friday. So you get these reports, and sometimes there's pockets, right? And you start zipping around before the numbers come out. And I mean, we kind of joke lightheartedly that, the numbers come out and the trade is kind of waiting, and you see some swipes. So to Jace's point, having orders in there's probably not a terrible idea at this stage.
Yeah. It feels like it's not going to do it, right? I mean, the way it's been trading, you just kind of go, oh my God, what is anything going to happen in corn? But it does, as soon as everybody's convinced, a move like that can't happen. It does. He's got to be ready for it. So,
yeah, good stuff. And we'll talk a little bit more on some pre-report estimates tomorrow morning. There, Ryland, real quick here. We got a couple minutes before the open. Thoughts on how this cattle's been trading?
Yeah, well, we've seen a little bit of light trade yesterday at lower money from the previous week, 188. I mean, very light at this point, so I don't think anybody's putting too much stock to it. But as far as the trade goes, another kind of abrupt sell-off here. It looked like just the fact that we're seeing lower beef prices, lower cash already, you're seeing quite a bit of panic. So you're getting down below some of these more intermediate term moving averages. So the trade's starting to get a little bit more cautious now that we're moving out of the seasonal. Beef prices were down $4.80 yesterday in choice. So far, the light sales that we've seen in the cash market have been around 188. That's two lowers from the previous week. So these are all things that are starting to culminate, and the price has been on a pretty significant rally, and we're in the midst of the roll. So it just seems like with open interest going down, the board going down, cash, beef, you name it, there could be a little bit more panic, a little bit more follow through. I mean, we've managed to poke our head back up over these moving averages on these breaks, but I think we're just starting to move past that time frame. So we've where we would really see a lot more support on the fundamental side, but on the other hand, there's still a long way to go. I mean, you priced in quite a bit. You've got a big discount on the board relative to where cash would even trade. So right now, I think there's just a little bit more of a kind of wait and see going into this week. But as we've been talking about, these are great levels to really just start to hedge a little bit more, getting a better revenue floor, just trying to figure out what you want just in case we do see some kind of massive sell-off like we saw kind of last fall. I think it's just good to be prepared in these situations, especially with the board just holding at historical levels. Everybody's got dollar signs in their eyes for the next 2 years, but on the other hand, we know how crazy this cattle market can be. So just being prepared for that $20, $30 break. I mean, even though it's, there's not a high likelihood at this point, you just want to be prepared just in case there's some kind of shock around the corner. So I think that's just what the market's going to be focusing on, going into the rest of the week.
Yeah, and you mentioned on the risk management side, but some of those out forward LRPs are starting to open up too, right? That think they're getting some forward coverage on.
Absolutely. I mean, it makes a lot of sense. It's a great way just to kind of have some of the risk on the downside managed. It's just price protection for the most part. So it's pretty easy just to, get some quotes, see what you want, see if you want that kind of level of protection. What options are another one people would kind of look at, I think, at this stage of the game, just to make sure you kind of know where you're at if things really just start to collapse. So it's hard to sell the board with this kind of discount, but those are great ways to protect yourself in this kind of environment.
No, very good. Appreciate the input there. Oh, go ahead, Bri.
No, I was just going to say, Rylan, I heard that NAS is reinstating the July reports, so that has to be a win for the industry. Wouldn't you think?
Is that right?
Oh, yeah. I hadn't seen that yet, so I appreciate that.
Yeah.
All right. Well,
yeah.
Maybe they got their way. Maybe they got some funding back on the books. So sometimes that's all it takes.
Yeah.
So, Bri, with that, I mean, what will they do some back data then, Ryland, or what have you seen when they've canceled those reports like that? Because it's happened numerous times.
I mean, is it coming out this July? I don't know.
No, it looks like July 25. July
Oh.
25. So.
Oh, July 2025. Yeah, sometimes they'll put in back data. That's what they did, I think, the last time. But otherwise, it's anybody's guess. I don't know if they're going to do that this time around.
That's got to be pretty crazy to go back
right?
look at all the previous data and try to trade that.
Well, I mean, they're only missing one report, and you can see, from a couple times ago when this happened, there is a gap in the data still. I mean, some people were able to kind of fill in the gaps, but there's just the initial release you could still see the gap in the data. So
that's good stuff. No, I appreciate it, guys. We just came into the open here. We got December corn down a penny and 3/4 at 406 3/4. November soybeans up 4, 1084 is the last. And December Chicago wheat is down 8 at 587.5. Tomorrow morning, we'll have export sales out at 7:30 Central. So we'll visit about that in the war room tomorrow morning. And then, as we've mentioned numerous times here this week, we've got the WASDE production, USDA production report out Friday. That'll be 11 o'clock Central. So every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments there this morning, guys. It was a good conversation. Hope everybody has a great day. We look forward to talking to you again tomorrow.